you don't know where to begin, better ask Win.
Shane, good to see you talking through the headlines today. How to invest when interest rates are cut. Interest rates have been high since March of 2022, but they are finally coming down. That means it's time to rethink how we're investing. But before we get into specifics, why is the Fed now lowering rates?
Well, of course, we saw very high inflation coming in the last couple of years, and that's exactly what the Fed did, or why the Fed rather raised interest rates, was to try to cool that inflation, keep the market from getting completely out of hand and falling into something of a recession. And so now that fear of recession has started to kind of soften, they're looking at reducing rates, and they've already begun.
And so I'm glad you brought that up, Shane. When will we know if we've avoided a recession?
Well, it's kind of a difficult thing, I suppose, to define. Now, there are specific definitions out there about consecutive quarters of GDP, et cetera, that define recession, but knowing whether we're out of it or not, I guess, is another story. And the Fed has a lot of tools that they use and things that they look at to try to make the best decisions they can. But I think the most obvious answer is that we won't really know for sure until we're completely out of a high inflation environment and we're kind of back to normal where things have cooled off and we're pretty confident about the economy going forward.
Yeah, only in the rearview mirror. So now let's talk about investing when interest rates are on the decline. What's the biggest difference?
Well, as rates start to drop, of course, things like your CDs, money markets, high yield savings, all those rates are going to start to drop and drop quickly. And they're starting to pretty much right now in late 2024. And so you want to make sure that that money that's sitting in those things that may have been lazy money or just cash on the side doesn't get forgotten about, because there's an opportunity cost that starts to become more apparent as those rates drop. If that money was getting 5% and now it's going to be getting, 2-3%, that's a pretty big difference, especially when the market could be returning to you a lot better than that. Make sure you don't ignore that opportunity cost there.
All right, so now let's talk through some specific investments that we should perhaps consider now that interest rates are on the decline. They are small cap stocks, high yield investments, bond ETFs, REITs or real estate investment trusts, and housing stocks.
Well, things like those real estate investment trusts, of course, as rates start to drop, real estate should become much more available to individuals and to businesses. So we should see a lot of movement in real estate. Small cap stocks, of course, should see a bump with rates going down because businesses have more access to money. It's easier to borrow, fuels growth within businesses, right? So that should keep going.
All right, some good considerations here. Shane, if somebody wants to talk about maybe buying or talking through some of these investments, what's the best way to reach you?
Best way to reach us is by phone or online. Our website is winstonandcompanies.com, or you can call us here at our office, 602-456-1928.
Great. Shane, thank you.
Thanks, Erin.
Got a plan for your retirement, 'cause you know it's just down the road. But if you don't know where to begin, better ask Win.